Before we begin, I would like to introduce the management and distinguished guests who would be addressing today's gathering. From the company, we have all the four founders, Mr. Lalit Keshre, who is also the Chief Executive Officer, Mr. Harsh Jain, who is also the Chief Operating Officer, Mr. Ishan Bansal, Chief Financial Officer, and Mr. Neeraj Singh, the Chief Technology Officer. Joining them is also the Head of Investor Relations of the company, Mr. Kunal Raj Singh Chabra. Representing the bankers, we've got Mr. Rajat Ranjan, MD at Kotak Mahindra Capital Company Limited, and Mr. Ravi Shankar, the MD and co-head of India Investment Banking at JP Morgan India Private Limited. Post the presentations, we'll welcome questions. For the press present here, we'll pass around a mic, and a gentle request to all those who joined us virtually to kindly post your respective questions in the Q&A panel available to you on the Zoom webinar. A small request to please keep all mobile phones on silent and also identify your name and media house before asking questions. I'd now like to invite Mr. Rajat Ranjan from Kotak Mahindra Capital Company Limited to initiate the proceedings, please.
Hello, everyone. On behalf of the board, the management, and the IPO BRLMs of Billion Brains Garage Ventures Limited, which is Groww, it is my absolute delight to welcome you to this press briefing for the IPO. When Groww lists, it would be the largest capital market intermediary IPO in the history of Indian capital markets. For all of us in this room who play in the capital markets as reporters, journalists, bankers, and sometimes as retail investors ourselves, learning about Groww and its powerful mission and approach to building the business is a memorable experience. We've been delighted by it as we've gotten to know more about it, and we hope that you'll share in that experience. Groww is a unique blend of design, product, technology, and strategic thinking and execution, which offers simplicity and trust to millions of retail investors every day in cities, towns, and villages across India. It offers broking services, MTF, credit, MF distribution, wealth services, and more. Sample these numbers. 80% users consistently come organically. 77% 3-year customer retention. 14 million active users, 52% active user growth since FY23, 90% customer assets growth, revenue growth of 85%, 85% contribution margin, 56% EBITDA margins. These are numbers, as people who watch the markets, are outstanding. It's wonderful to have 5 of the billion brains on this side, and I'm sure as you interact, you'll get to appreciate what this company is all about. At Kotak, we are proud to be the left lead book running lead manager for the IPO, and I would like to now open the floor for proceedings of the day and invite Lalit, Harsh, Ishan, Neeraj, and Kunal to take you through the Groww story. In the days to come, we hope you'll share the story with your readers and audience and spread the word around. Thank you.
Thank you. I'd now like to call upon the management, Lalit, to take you through the presentation.
Hello, everyone. Can you hear me? Great. Thank you so much for coming. I'll just walk you through like a few minutes about us. The 4 of us, all 4 of us are here. We come from different parts of the cities across the country, mostly smaller cities, and been working together for long. We have been techies, like, engineers, and we thought, can we democratize investing, like, what has happened in like other industries, right? So can we use internet, can we use tech to kind of make investing simple, transparent, and delightful? And our philosophy was always like, we come from background where customer obsession is in the DNA. So we thought, can we kind of build a very different company, direct to customer, multiple product where customers can come in and invest in any product they want, build their wealth, stay with us for their life, and kind of grow together, make product very simple and transparent. So if I will show you the app in a while, and then you'll see how transparent we lay out everything for the customer. And of course, leverage the tech, our background, our right to win, where kind of we play. And this has been our journey. So the philosophy that we have is that when you launch something, create something so beautiful for customers, so transparent that you elevate, like you create a huge delta of what currently exists in the market. And because of that, our customers love the product. They talk about it. Most of our growth happens through word of mouth. More than 80% of our customers are organic customers. And as we keep launching more and more product, as you will see the product velocity, being a tech company, like we need to keep like launching more. We keep launching what customers want, and based on that, as more and more products we add, it leads to our growth. It helps existing customers to kind of buy other products and so on. So our retention goes up, our engagement goes up, and as we'll see again, like how our operating leverage also as a business kind of starts working. Today, since 2016 we started, like the brand has been compounding month on month, year over year, and today we we are like household name for investing in across the country. Like you will see like dots across the country. We cover 98% of the pin codes in the country. More than 80% of what we take pride in is because of the tech and internet and so on, like penetration. More than 80% of our customers are beyond top 6 cities, and most of them coming because their friends or their family is recommending them. Scale wise, we have 18 million transacting users on the platform. In mutual funds, 1 in 3 new SIPs that created in the country happens on Groww. Of course, in the as a overall cumulative market also, we are the largest. Even in SIP book, we are the largest. So people prefer us to kind of build their wealth. In stocks, 1 in 4 demat accounts happen on Groww. And overall, with all these multiple products we have around 2.6 lakh crore of assets in the platform. But what we really take pride in is the retention rate. So when customers come in, they join us young. So median age of our customer is like 20. It used to be 27, now it is 31. So customers are kind of growing with us, and as they spend more and more time with us, their assets continue growing, and they keep buying more and more products. We are also expanding the market, like a lot of as I said, like they are young when they join us, so most of them have never kind of touched any investing product before. So they come to us very diversified. So 23% of our customer base, are women. So we are kind of democratizing there as well. And another big trend is that a lot of our customers, as I said, like when they spend more time with us, they get wealthy, so they're converting into affluent customers. And naturally, these affluent customers have higher AUM, higher retention. The growth is also much higher because not just our existing customers who are graduating, but as we became the leader, a lot of existing customers on other platforms also prefer to come on Groww. And we continue doing this. And this is like a quick how our business model works. As I said, like we have very high retention, so that kind of gives a base, and then every month over month, every quarter, we keep adding new transacting customers. So overall, that constitutes our active customers on the platform. And then on the ARPU side, all these customers, there is an attach rate of every product. We have like 14 plus products on the platform. Customers for every product, there is like certain number of customers who would buy that product. There will be some amount of wallet share in those products, right? As they kind of spend more time on the platform, and then the different products are different pricing lever, and that's how we make our revenue. But while our revenue continue growing as our number of customers go up, and our ARPU is average revenue per user, like as the customer cohorts kind of continue maturing, our ARPU keeps growing, and hence our revenue continue growing. But the cost, so we have primarily three costs in our business: cost to serve, cost to grow, and cost to operate. Cost to serve is more like a variable cost, mostly tech, because we are 100% tech driven. We don't have any physical stuff and physical offices or sales and so on, and mostly cloud and all the variable costs. We also do everything in house, so because we are techie. So that becomes like a big leverage for us. Cost to serve, they don't grow linear to revenue. Cost to grow is the marketing cost. As I said, like more than 80% of our customers are organic customers. So, and then you also incur growth cost only for the new transacting users, which are the ratio wise continue kind of falling down. Cost to operate is your fixed cost, which is like, our tech talent, and which is the biggest strength, is what I believe is like, who understand customer and so on. That also does not grow linearly. So hence, our EBITDA, our adjusted EBITDA kind of, there is a solid operating leverage like a tech company. Going forward, like we continue doing that. If you look at the market today, like although we are like number one and so on, but if you look at the overall kind of the potential, the market and so on, it's kind of it's very big. In 2016, when we started, the penetration of people investing in mutual fund was just so low. People investing in stocks was very low, and because of lot of tailwinds that we have seen, Aadhaar, KYC, Aadhaar-based KYC, UPI, your penetration of data and so on, that has kind of led to very, very solid growth. But in spite of that, if we compare ourselves against some of the developed economies, right, we are far from where we can be. We see this secular trend of people, first of all, kind of number of people, kind of penetration in the country continue expanding, right? And then also a lot of wealth that is in traditional assets moving to financial assets, which is typically what happens when countries develop. This is our growth equation. We continue growing. So number of active users and penetration into wallet. This is the equation that we wrote when we started Groww, and we still kind of keep it in our whiteboards in the company. And this like how it comes out is that we continue investing in the technology. Like as I said, like everything that we have done is in-house. That helps us. That gives us unfair advantage to provide much better experience to our customers. In addition to providing us operating leverage, because that's everything is kind of stays with us. Then we also continue investing in our brand, because Groww, like as I said, like India, if you go to like some of the cities, Groww is the default brand for anybody investing. On the products and services side, like from the industry side, like broking and wealth management are the two large areas that we operate in. And there we have a huge list of products that will continue launching over kind of many years in the future. And these are some specific products that we will talk about anyways. And we have talked about it in the prospectus as well. This is the tech part, which is like what we have built so far. But I think I'm going to show you what actually customer sees. What customer sees is the under the hood stuff that we do, which nobody gets to see. But let me just kind of show you the quick demo of Groww app. Yeah. No, it's there. Yeah. Yep. Yeah. Yeah. It's lagging or what? Yeah. So this is the app and customers logs in, so I can't show you onboarding because I'm already onboarded, but I think if you are not a Groww customer yet, you should try kind of logging on, and you will see how delightful it is. So when you go on the product, you can kind of browse any product that you want to kind of this is very different from how it happens. Like you can kind of go to any product and browse through that. So I'm just kind of, I'll randomly go onto a product page here. You will see everything is very transparently listed, your fundamentals, your market depth, all the financials that you want to see. You can go into details. So the one thing that we have taken care of is like, the more deeper customer wants to go, there is a way for customer to go there. So if you want to go in deeper financials, you can go there, and then you can know a lot more about the company. Likewise, we have here we have a lot of other products. We have ETF screener. So ETFs are becoming very very popular. Different ways customer can filter ETFs, and then they can also kind of go to product pages. Again, same thing, like, they can look at past performance, all the details about them. Recently, we launched bonds. So currently, they are primary bonds, but we'll be launching secondary bonds and a lot of other things also. We have IPOs. So currently, IPOs are listed. Applying for IPO is like, don't look it as an advice, but I'm just trying to show you how do you apply for IPO. I just kind of did one, and I'll get a UPI request, and then I'll be done. By the way, UPI is also Groww UPI, so everything is within the app. And then we go to mutual funds. Like, this is the one that we start. By the way, I have hidden my portfolio because I don't want to show you my. So you can go through all the. This was a kind of, I think this is something where we played a lot on the design part and on the transparency part. If you go to mutual funds page, again, you can look at all the performance, you can look at all the holdings, returns, expense ratio, exit load, fund, who is managing fund, about the fund manager, pros and, like, whatever you can think about a fund, you can see it. Likewise, then you can go to derivatives, and then there will be some very kind of hardcore traders. For them, we have kind of built this very beautiful option chain. Now, if you want kind of, there's a simpler option chain, but if you want to go into much deeper things, you can enable Greeks, and then you can look at all the Greeks. You can get into basket mode. You can execute all your advanced strategies here. You can create straddle or whatever you want to kind of do. And if you're a kind of a chart-based trader, you can get into charts, very advanced charts, all indicators, everything, like whatever you need, everything on, like, very fast, very simple, and so on. So this is like, and then there are a bunch of other products which, like, in the interest of time, I won't get into. As I talked, a lot of our customers become like become very affluent. So for them, we have the wealth management product where you can kind of track all the your entire net worth. You can browse through like sophisticated products which are like APMSs, AIFs, and so on. So again, opening up us transparency, everything is available, all past performance and everything. So yeah, that's kind of simple demo. We can. We also wanted to show you what we have built on the web. So what I was showing you was on the mobile, which is the primary thing. Across in the corners of the country, everybody use a mobile phone, but then there are some people who also use desktop for kind of complicated trading and so on. So Neeraj is kind of going to show that.
Yeah. So, am I audible? So what we have seen so far, Groww app and W app, where we have gone through stocks, ETF, mutual funds, and options trading. I'm going to walk you through the Groww web, especially the advanced features which we have built. This screen that you are viewing right now is our is for the people who want to have something which pros prefer to do. Every day of trading is a very different day. Each day you will not have a similar strategy. Depending on what strategy you have, you want to customize your screen in a very different way. So I'm going to give a quick glimpse of how you can design your own screen. So here we see the widgets, a lot of widgets. It's like a platform. You continue to add. Today you see, let's say, 9 or 10 widgets. We'll continue to add more and more going forward. I'll quickly arrange some of these screens for you. All are drag and drop. You can resize the screen. Okay. You can merge two tabs here. I mean, there's a lot can be done. I'll quickly show you the presets that I have done before, just to show you quickly. Let's say you're gonna do something about volatility trading, or you want to do some scalping today. I have taken few positions just to give you the demo. But let's say someday I decide to scalp. I want to keep an eye on multiple charts and do a quick buy and sell from here. So just one click and it doesn't take you through the permission. It just pays off. Quickly, I'll walk you through one of the edge that everybody will have on this advanced tool, and that is the AI component, AI widget over here. Okay. Here. So this definitely gives an edge in all your research that you want to do. Apart from the research discussions, you can transact also from here. Let me ask some question. I'm not gonna do actual comparison, but I'll ask, can you do the comparison? So it breaks down the customer query and then evaluates what is customer expecting as an answer. By the way, this is an AI agent. It can make mistakes, and anything that it shows has to be verified by the investors. So let's say if I want to So I'm asking it to buy me 2 stocks of HDFC Bank at market price. It will understand the customer request and then process whether it is a research command or it is something where customer is asking to transact. So apart from text, it gives you the infographics as well as buttons to act whenever there is a request for action. I confirmed the order and let's see what it does. So now if I go back to my holdings, I would have received 2 stocks of HDFC Bank. So there's a lot that you can do in terms of research, and this definitely gives an edge to everybody who is using advanced tooling on the Groww web. That's all. Thank you so much.
Thank you so much to the founding team of Groww. In case anyone in the room would like to again experience the Groww app, we've got 2 members from the Groww team who are sitting behind the room. They can also help you experience the app on the respective mobile phones after the Q&A session. We'll quickly move into the Q&A. We'll first take questions from the audience present here. Then we'll move on to those who joined us virtually. Kindly identify your name and media house before asking the questions. Could we have the first question, please?
Good afternoon, Team Groww. Thanks for a detailed presentation and briefing. I'm Mehul Dani from FinTech Biz News. Can you give some insights in terms of what has been the average investment in IT operations in last couple of years, and what would be management's approach going forward for the IT capex?
So, am I audible? Yeah. So, the way we look at technology for us is mostly from a people perspective. So, if you look at you can say large part of our spends which happen on people side is happening for tech related folks. We have roughly 500, 600 folks who are only focusing on technology. And you will see that cost primarily sitting as employee cost. We don't actually capitalize that cost. So we expense it out every year in the P&L itself.
The technologies deployed by you, is it proprietary in nature, or there are some functions which is outsourced through some vendors, especially customer facing technologies?
So most of our technology is in-house, even not only customer facing, a lot of the backend, like even payments we have built in-house. So we use vendors also from a BCP perspective, business continuity or a backup perspective in some ways. But for example, in payments, 90% of our transaction we process through our in-house technology. And those transactions where our own UPI is getting used, the success rate is significantly better. The time to kind of receive the money or receive that success rate is significantly better. This gives us, from a ongoing perspective, one of the best experience for the customer. And at the same time, there is incremental cost of some of these products for us is almost zero because these are already inbuilt, and the only cost for us is mostly on the cloud side where they are deployed.
Thank you. Can I mic please?
Anurag from ET Now. I want to point to your slide on this revenue per user. Now I see that as there's been an expansion in the number of users for Groww, your revenue per user, that pace is slowing down. I mean, if we look at the numbers of say FY24 and we're comparing it to FY25, I mean, there's been a fall. So, I mean, there's been an exploding growth of your number of users. How will Groww seek to maintain or expand the revenue per user, and how would you check the impact on the EBITDA? Because I mean, if you look at the FY24 and FY25 EBITDA also, of course, I mean, it's risen, but it's not risen that great. I mean, there's just been a very small rise. Well, what will be your strategy be?
Sure. So I think first of all, the way to look at is there is another chart that talks about revenue per user on a cohort basis. And if you look at those cohorts, you will see that it grows every year. What happens when you look at an aggregated ARPU, if I add a lot of users in a particular year, the denominator actually expands much faster than the revenue, which brings down the overall average a little bit. But this will give us growth in the future.
Hello. Adding to Anurag's question, see, there has been a complete slowdown in broking industry because of the crackdown by SEBI on FNO segment, and options has been your major growth factor. How will you tackle this slowdown? Because if you see Angel One stock, it is down by almost 18% in the last 1 year. And even other broking stocks are also down. How will you tackle this slowdown?
See, so regulator and us, we both are very much aligned in what we want from the larger industry, right? Everyone wants to expand the capital market participation because that's healthy for the economy, and everyone wants to make the customers safer. And we continue to work with them. We continue to kind of adopt whatever the changes come because they keep on improving overall businesses, overall customer health, and the longevity of customers on the platform. So these changes will keep on happening, and every change will come down to a place where this will become more efficient, more transparent, and more healthy for the customers to keep on participating in the capital market.
Nestle from Financial Express. One question to start with. You have the top in the business. I mean, you have the market leadership, but Zerodha has a greater valuation. How do you bridge it? Second is that in the future, do you see competition from fintechs or traditional brokerages and other?
So first thing is like we don't try to compare with anybody else, primarily because we are trying to build a very different platform, more kind of customer focused, more like a wealth platform and so on. So I think you meant ARPU difference between us and rest of the folks and so on, right? Am I correct? Like more on the
Well, I think if you look at the Hurun valuations of the unicorns, they were $9 billion, and you were at $8 billion recently when they came out with a report. So that's what I was referring to.
valuation, so it's on buyers and sellers. Like, our job is to build the business and create value for shareholders, for customers, for people that who work with us, and so on. So I think that we will not be able to comment, but I would try to tell you that how our customers evolve, right? They join us young, then they spend more and more time with us. As the customer cohorts mature, they build more and more wealth, and hence that's how our like ARPU kind of continues growing. And from the competition perspective, over last 9.5 years, if we think about ourselves, competition has never limited our growth. Our growth is always kind of limited by what we can launch for our customers. The more products we continue launching for, because we started from like nothing and then we kept on building products. Every product we launch kind of brings growth. And so far, like if you see, why would a customer not come on Groww? Because Groww did not have XYZ product. The moment we launch it, growth happens and so on. And if we see for next many years, there are so many things we will continue launching. So that will be the that will be fundamentally determine our growth rates for the future.
Okay, so what would be your priorities in terms of investments from these funds?
So broadly, there are three major things we keep doing. We keep investing in technology because that's like the mode that kind of we have, and that's the reason why we are able to provide better customer experience. Also helps us in operating leverage and so on. Second thing is building brand, right? Because Groww is like, we are still very young brand, very kind of, and there are many years to go. So we'll continue investing there. And then third is some of the products which are new, which need some margin trade funding, for example, we just launched around a few quarters back. So that adoption rate will continue happening. And then there is some amount of loan against securities and lending that we are doing.
So you've kind of disrupted the bond placement platform. So is there any other industry similarly that you can replicate it?
So the way we think is that so we started with one product, mutual fund distribution, and then as it kept growing, we keep getting customer feedback. Okay, and that based on that we keep launching products and so on. So if you look at like almost like, as I said, I don't know, 14 products on the platform, they are all built as and when we get customer demand and so on. So right now there is a good pipeline for next for a while, MTF, as I said, commodities on wealth management. That is like one big area that we are focusing on. A lot of our customers are now affluent, and we did an acquisition also because for that, to serve these customers the products that they need. I showed the app as well that I kind of that will be kind of providing to our customers.
Good morning. So my name is Ronit from NDTV Profit. So I have a question. So Groww's IPO is coming at a time when the stockbroking industry is reported it's witnessing a regulatory clampdown on FNO. So my question is can this affect the revenue stream of the company? And if yes, then how? And apart from that, what is the company doing to mitigate these risks? And my second question to you is, RBI has not been comfortable with unsecured lending. The central bank has also eased loans for capital bank loans by banks. Can this change your plans for the NBFC sector?
So let me take this question. So if you look at it from a revenue perspective, we've been growing 85% year on year, and we think a capital market is like a huge opportunity in India. We are still at a very early stage, and we will see probably hundreds of millions of customers over a period of time entering into capital market. And we want to be there for all of those customers, and also have like multiple products for those customers. And we feel the revenue will automatically follow over a period of time, because one thing that we have to understand and learn is that in the end, we are in a capital markets business. There will be volatility in this business because in the end of the day, markets are volatile, right? And there will be volatility in this business as well. But whatever volatility that happens in long run, things will keep on growing because India is still very underpenetrated. We need to kind of get to, if we have to be a developed country, we need to be grow a lot more from a capital market perspective than even higher than the economy. The second question that you asked around the NBFC piece, we don't today, our lending business is very, very small. So we have roughly 1100 crores of book. Whatever RBI does on lending side will not have a significant or it will have a immaterial impact on our business as such. On the last side, I think this is a very good news for us because we don't only do business on our balance sheet. Large part of the lending business actually is a distribution business for us, where we partner with banks and NBFCs to deliver credit to our customers in a more user-friendly way. So if LAS is more accessible to customers via banks, it will even benefit us because we will be able to partner with banks as well for loan against securities and loan against mutual funds. Earlier, that was a difficult situation because banks were capped at 20 lakh rupees. Now, banks can even lend up to 1 CR.
Thank you so much.
Hi, I'm Himadri from Economic Times. I just wanted to understand, a large chunk of the issue size is OFS. So post the sale of shares by promoters, what will be the stakeholding of each of the promoters?
So just to clarify that we, as founders, we are not selling as a part of OFS.
Right.
So our shareholding will be more or less similar.
0.7 is what you...
So no, so that has as a updated RHP. If you look at it, there is no mention of any of us selling.
All right.
If you look at, there will be still a dilution because of the primary issuance that we are doing. So roughly 1.6, 1.7% overall company will get diluted. Based on that, our dilution will be more closer to 0.5, 0.6%. Today we are closer to 28. After this, we might be closer to 27.5.
Got it. Thanks a lot.
Sir, my name is Nitin Neganti from Money Times. Sir, your provision for loans has gone up substantially in FY25 as well as in June 25. And the second question is recent SEBI order on mutual funds, how it will affect you directly or indirectly. And you invested about 600 crores in debentures in 24, which came down to about 120 crores. Again, in June, it has gone up. So can you please explain this?
So these are like three different questions, but I'll take one at a time. The first one on the provisioning side. So if you look at our NBFC is very nascent from a age perspective. So what we realized was initially when we were doing provisioning, we were not doing enough provisioning because we didn't have future data of how much NPA will look like. And as our book became more mature, we actually come to a level where it is more stable. And we did a one-time correction of that provisioning. Second piece, if you look at it, is on the investment in debenture side. So that piece is like there is a treasury we hold today, which is primarily around 2,000 odd crores, which is free cash with us, which our treasury team tries to kind of optimize for returns without taking too much risk. So sometimes they invest in mutual funds, sometimes they invest in bonds or debentures, or sometimes they invest in fixed deposits as well. So they keep on changing the strategy based on how they see best optimum from the returns perspective on their treasury amount. Mutual fund has actually no implication, that regulation has no implication on us. Specifically, one, our revenue from mutual fund today is negligible. Second, that too, again, for us is almost zero, but once we acquired the FISDM piece, there is some revenue that comes from the mutual fund piece, but that also doesn't impact the distribution revenue from mutual funds. Second is, it impacts institutional brokers with the capping of brokerage, but we don't do any institutional business in Groww from a broking perspective as well.
Hi, this is Ashwin from Reuters. So just I want to press on a little bit on the FNO sort of impact. Obviously, there is the trading volumes will get impacted. And broadly, you have said that you're in alignment with the regulator. But from a business impact point of view, could you just give some, like, internally, have you assessed the impact on the revenue and the number of traders, the volume that will be impacted? Have you already seen that happen? Like, if you can give some details.
Go ahead.
So, broadly, we had a regulation coming in the last year, towards the end of the last year, right? October, December, and all. So we have some data points from that, how it is played out, how it is changed overall in the scheme of things. I think on a similar basis, there'll be some changes happening with the new regulation. Now, it's very unclear what sort of regulations may come. So it's very difficult for us to comment on what will be the impact on it. What we've seen is that there is one product on our platform for the customers. So today, when customer comes, they have 13, 14, 15 options of different products that they engage with. And each product has its own life cycle of monetization, and which keeps on growing as the adoption grow. And then user bring more users, and then the growth keeps on coming. So the sort of resilience that we see on our platform, and that is evident from the last regulation change in one of the products, we believe that this resilience will keep on increasing and keep on compounding as more and more customer comes, more and more products are out there. So those small changes that may impact one part of the customer segment in one kind of product that they're using will overall, in a broader scheme of things, will not matter too much. Thanks.
Just one more question. Lalit, you mentioned that there are several products that you're planning to launch. Can you just give some specific examples, like the ones that are set to come soon?
Yeah.
If you can share something on that. Yeah.
So the biggest one is wealth, that we are kind of, with this acquisition, we are launching to our customers. That's wealth is very broad category, but inside there is PMS, AIF, there is some bit of insurance we do, there is advisory, there is also wealth partner support sometimes, and so on. MTF we are scaling, right? And third is commodities we are launching. So these are the three immediate ones. Alas is also another one new product that is getting launched. And and beyond that, there are a lot more, but then we'll talk about in future.
Thank you.
So, if you look at in FY25, we closed the year with a 600 crore of book, and Q1 we closed with around 1,000 crore. So it is growing almost 60% quarter on quarter as of now.
Thank you. Before we get back to some additional questions from the audience here, there's some questions that have come in from the online participants. I'll just read out those questions to the management sitting here. The first question is, what strategies are in place to accelerate monetization from the affluent user segment? Could you throw some light on that, please?
Yeah. So it's same. So basically, what happens is, as customers become affluent, they have. So the way we think about it is from the customer needs perspective, and then monetization follows. What are customers needing now? And what we realize is affluent customers need, once your portfolio is like very, very decent size, then you need some help there. So advisory comes into picture there, or portfolio management services is another kind of product that you need. You need AIFs. You also want to invest in some more sophisticated products like, private equity or, bonds and so on. And then for your cover, you need insurance and so on. So basically, you kind of look at even more holistically, where it's not just kind of democratic products, but also kind of more sophisticated products that are only relevant for. And that's why there's a different app for that, right? And then, of course, monetization follows, like what we have seen so far in our journey. Like, if you build value for the customer, and then there will be some business model. We don't invent business models, because business models in financial services industry are kind of there.
Thanks. The next question is, despite the recent regulatory headwinds, how did you manage to achieve a high operational resilience with a smaller revenue decline than competitors?
Yeah, I think we just discussed that. See, as a platform, when you have multiple products, and then when you have customers coming for each one of them, they discover different products and different needs, they engage with the different products. So the resilience is built on that front from a customer engagement, retention, and ARPU point of view. From a business point of view, also the way we are operating is we are a sort of tech company where the expenses are pretty fixed. Most of our expenses are fixed expenses, and the revenue that comes on just adds to the top line and bottom line in the same way. And these two things together makes us a more resilient.
Thank you. The next question is, one of your competitors once said that for a broking company to go public, it makes them more accountable and adds on more scrutiny. What would your take be on that?
So if you have millions of customers and if you have billions of dollars being managed on the platform, I think you better be accountable because it is people's hard-earned money. And if you look at all the large institutions across the globe, like, listing brings more accountability, more trust in the system. So yeah, I mean, that is how we think. And but yeah, I mean, all perspectives are good.
Do we have any more questions here?
Yes. So name, we wanted to name something which is which signifies growth because we want to grow, like, customers growth and so on. And we wanted to name it Groww, GROW, Billion Brains. So so we it's a long story, but our first original name was Next Billion Technology, Next Billion, because we have some kind of we like billions word because Groww is India is a land of billion people and so on. So Next Billion was the name. Then we named the company Groww. Then Billion Brains, Garage Ventures. See, sometimes you just are on a phone call and your CA is asking, give me the name fast. This is not available. This is available. What should I do? I said, okay, billions ke aage, what can we put? Billion Brains. Billion Brains is not. So what can we put? Garage, because we are like Steve Jobs started his business from a garage. So garage aa gaya. Fir kya? Ventures, again you add something. So that is how you name. No.
Thanks for that question. Another couple of questions from the online audience. Could you share the split of revenue between broking and wealth management?
So wealth management today is not yet consolidated in our revenue because the acquisition just got completed on 1st of October. Hence, today, most of the revenue actually around 85% is coming from the broking piece. Rest is coming from others and lending business. So wealth management today is not yet consolidated. That'll come in probably in Q2 numbers.
Okay. And how do you look at the entry of banks into discount broking and wealth platforms?
See, the same question that I answered about the competition. See, I think what we have learned is that focusing on customer is a lot more important. And we believe that if we kind of continue understanding the next set of customers and so on, we will, and we keep building the products for them, we continue growing. And what we have seen so far, when we started mutual funds, there were a lot of mutual fund distribution platforms. When we started broking, there were a lot of brokers and so on. But I think competition is like in a growing industry. Everybody is doing good, but we try to focus on the customer, keep building for them, and keep our product velocity high.
Thank you. We'll take the last question. I know it may sound a little repetitive, but there are a couple of questions since Harsh spoke about the tech part. How does your tech help you build and achieve scale, and how does that help you give a competitive advantage? There are multiple questions around the tech, so if somebody can just take that again.
So when we started in 2016, wanted to build something for millions of users, making market accessible to all of them. To plan something like that kind of financial inclusion at that scale has to be thought through. So tech basically plays a very important role there because you're talking about millions of users, and to make this thing simple for them, at the same time educate them about these products. So I think we played on all the three areas where we have built the platform in such a way which is not only simple from the outside, not just our app and web, but from the inside also, where making any change, building anything new on top of that is pretty fast. We can accommodate any change within a matters of weeks. Then we spend enough engineering bandwidth on producing content to educate our customers. More they get to learn about the products that we have on our platform. They use one product and then they get better at that. They use another product. More the product they use, they stay longer on the platform. That's why our retention for 3 years is 77%, and that translates into revenue. So today, after 8 years of those engineering efforts, a lot of research, a lot of rewrites, a lot of re-architects, we have a platform which can support millions of users. At present, also we can handle at least 5x of the capacity that we deal with, and at the same time, they provide seamless experience to all the customers.
Thank you. I'll now like to invite Mr. Ravi Shankar from JP Morgan India Private Limited for the closing remarks. We'll take it offline.
Thank you, Lalit and team, for a wonderful presentation. Groww is indeed a special company for democratizing the investment culture as well as providing wealth creation opportunities for broader population. It's not hence a surprise that Groww is the only company of a scale which is coming to IPO markets within a decade of its foundation. I want to take this opportunity to acknowledge the visionary leadership which has transformed Groww into India's largest and fastest growing investment platform. We at JP Morgan are proud to have partnered with Groww on this milestone event. And now coming to IPO, the anchor date is set for November 3rd, Monday, and the books would open on November 4th, Tuesday. The IPO is a mix of primary and secondary capital raise, with the primary being 1,060 crores and secondary component being about 557 million shares, which are the upper end of price band, which make IPO size about 6,632 crores. We hope this press meet has been helpful to you. Be around for any questions subsequently. But thank you and have a great rest of the day.
Thank you. Good. Thank you.
Done?